Morning, you're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Good afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, and hello to all of you. I'm Alex Matthew, and this is the show that gets you answers to all your equity-related queries. And you can send them in to us on Twitter, Facebook, YouTube, and WhatsApp, or you can call us on 022-454-04141. And finally, you can mail us at askbq@bloombergquint.com. Don't forget to add the AskBQ hashtag. Our two experts of the day are Amar Singh of Angel Broking and Parthiv Shah of TRACOM Stock Broking. They're going to answer all of your queries. Thanks for joining us.
All right, but before we get to the individual queries on the show, here's a quick look as to what's happening with the markets right now. And clearly, the opening was very, very subdued, but we built on gains. It is the expiry week, so all-important week for the April series. And currently, as we speak, markets are also at day's high. We conquered the 10,600 mark. 10,624 is where Nifty is trading. Let's just pull up the contributors list and see which are the stocks which are contributing the most. And goes without saying, TCS features right there on top, gaining in trade. In fact, that's the company which also crossed the $100 billion mark in terms of market capitalization. The other biggie, Reliance Industries, IndusInd Bank, and also Kotak Mahindra Bank are the ones which are contributing the most. On the flip side, HDFC Bank is seeing some bit of profit booking post. Its numbers were pretty much stable. ICICI Bank is weak in trade. HUL, Hindalco are the other stocks which are weak in trade. For the broader markets too, we've seen some gains coming by. The Nifty Mid-Cap Index is up 0.6%. The Small Cap Index is also trading with gains of 0.5%. Pull up the Advanced Decline Ratio. That's going to show you a clear picture, and clearly in favor of the advances this Monday. If you look at the NSE stats right now, it is 3:2 when it comes to the Advanced Decline Ratio. So good market breadth. What is in focus once again after Friday's stellar run for Nifty IT of almost 5% gains? Today is the third straight day that the Nifty IT index is trading in the green, the top sectorial gainer. And if you look at the constituents, most of them have been trading in the green. So be it the biggie TCS or look at stocks like Tata, LXC, Mindtree, both of them have been trading around its lifetime high levels. And also HCL Technologies has perked up in trade. HCL2 is seeing gains of almost 3%. The Realty Index has also seen some bit of momentum, so stocks like Oberoi Realty as well as Godrej Properties are doing pretty well. Both of them have seen gains between 4 to 5%. Couple of other gainers on back of some news. Saskin has reacted to its earnings today. Remember, the EBIT margins for the company expanded this time around to 16.7. Look at the gains there, 16 to 17% higher for Saskin, 875. So it's been a good quarter so far for the IT companies. Unichem Laboratories, the company did not receive any observation for its Ghaziabad facility, which was inspected recently. That's trading with gains of 7%. And also something like Merck, that's seen substantial gains today. That's trading with gains of 12%. On the flip side, you've got Bhushan Steel. That stock continues to reel under pressure. Remember, in last week throughout, it has seen some bit of cuts. Currently, it's trading around the levels of 33. Also, something like BEML and Bharat Rasayan, pardon me, are the stocks which are trading weak this afternoon, Alex.
All right, and there's an interesting query coming up. The first one, M. Arjun writes an email to us. He has 550 shares of Motilal Oswal that he bought at 546 a year and 3 months ago. He wants advice as to what to do with his investment. Now, if you pull up the chart, it's currently trading at 1,010, and this particular counter has come off the highs of over 1,500 that it saw. But it's, so far this year it's down about 30 or more than 30%. But in the year or the preceding 12 months, it's still gained over 21%. So it's interesting. He's held it for a while. He's gained. He's made a notional loss, but he's continuing to hold. He wants to know what to do at this stage. Parthiv, what would you advise him to do? He's held for a while. He's more or less doubled his investment in Motilal Oswal. Should he hold on at this point?
Yes, I would suggest that you can book profits. The reason being that generally most of this investment banking is related, investment banking business and stockbroking business is very much subject to the market. And I think as we know the fact that we are heading into a lot of election season, and next 1.5 years could be extremely volatile. And like money making in the stock markets was delight in 2017, same might not be the case for FY 18 and 19. So probably the markets would tend to kind of discount that factor into many of these brokerages related stocks. No doubt Motilal Oswal has very smartly diversified into many different other businesses, but still I believe that they have a long way to go to build scale in those lending businesses, the typical NBFC businesses. And I think as on date, most of the value is getting from the brokerage business along with the investment banking business and the AMC business. So all these three businesses could get volatile going ahead, and markets might tend to factor in the discount going ahead in terms of the volatility. So I think I would suggest that one can book out from this company right now. He's making very good profits, so I think no harm in booking profit. And I think I would suggest to convert this position into a mid-cap private sector bank named like RBL Bank, where we extremely bullish on. And over the next 3 to 5 years, I'm quite confident that that investment would definitely beat Motilal Oswal as a holding.
Okay, that's the view on Motilal Oswal. Parthiv suggests that you should book profits and put your money somewhere like RBL Bank, which is trading at 505. Let's take our next query for the day, and this one comes from Brij Mohanlal, who writes to us an email from Delhi. He has shares of Clarent Chemicals, which he bought around 700 rupees. He also said post his buy, the stock started falling, and he wants to know what should he do at current levels. Should he book losses, or should he be averaging around the mark of 542? Amar, I'm going to come to you. Where is the support line for Clarent Chemicals? Do you see any sort of bounce back from these levels? If somebody's bought around levels of northwards of 700, should they be averaging at these current levels?
I would say, looking at the charts of Clarent Chemicals, what we've been seeing is that this stock has been on a continuous decline from almost 660 levels the last, I would say, since the last week of January. And currently it does seem to have found some support in the region of 520, 530. And technically also on the charts, it does have some bullish divergence. So what it effectively means is that the downside for the stock seems to be limited, because it does have very strong support around 520 odd levels or so. So if the client has a position, if the investor has a position, then he should ideally hold. And the upside resistance for this particular stock is around 560, 570 levels. That's the first level of resistance, because till the time that is not taken out, I would say that we could witness a sideways trading session for this particular stock. On the downside 520, whereas on the upside 570.
All right, that's the view on Clarent Chem. Let's move on. Take the next query. This one from Raga, who's writing in on YouTube. Hey, thanks for joining us, Raga. Your question is whether it is a good time to get into so many ceramics and Asian granito with a long-term perspective. And it's an interesting question there, because there's a lot of conversation about the housing space picking up over the next 3 years or so. So I'm going to take your question to Parthiv. Parthiv, I'm guessing it is an interesting space to play in.
I think it's a very interesting space to be in. Post GST, all the players who are focused on brand, I think they are the ones who are going to be key beneficiary with all the impetus from the government in terms of the affordable housing and overall the real estate market post RERA regime. I think looking to stabilize. I think all these companies will be beneficiaries, and some of these companies are even into the building of the toilets, because that is a very key element of the government in terms of their focus to build a lot of toilets all over. And we are definitely seeing some trend in terms of spend going over there. So all these companies are gearing towards that as well. So I think if I were to pick a couple of names, I think I'm very comfortable recommending Kajaria Ceramics, a very strong name, though it will look a little expensive on the face of it, but the scale that they have made going ahead, they can really do well in terms of the numbers. And second stock would be Sena Sanitary. Again, the same story. I think it has re-rated, compounded a lot of wealth. But again, the scale that they have, the brand that they have, and the equity that they have, because I think these are the type of companies where I think if you have a strong brand, you get a lot of repeat orders from your current distributors. So I think I'm very confident in these two names and GST beneficiaries as well, and definitely they'll do well going ahead.
Okay, let's move on. We're getting a lot of your live queries today, and this one comes on WhatsApp. Umesh Maheshwari writes to us. He's bought 1,000 shares of Srikalahasti Pipes at 378. He wants to know if he should book profits or wait. Well, he's not clearly mentioned his time frame, but I guess he's bought it recently. The current price is just about 382, 4 rupees higher than Umesh's buy price. Parthiv, I'll come to you for this query. If somebody's entered at this level of 378, and this is a company, it's the same group company of Electro Steel. There was that overhang of the group debt. Now that the plant has gone to Vedanta, do you see more upside for this company? Can it get better multiples from here on?
Yes, I do believe, even in the past when Electro Steel Casting, which was originally the parent company having stake in Srikalahasti Pipes and also having stake in Electro Steel Steels, I think luckily now that Electro Steel Steel has been taken over by Vedanta, a lot of overhang for these stocks is away. But I'm very bullish on the DI pipe sector because I think Srikalahasti Pipes has been quite a leader sorts in terms of the market share in the southern region and the areas that they operate into, and they've been quite efficient in terms of the margins that they earn. And we are seeing a lot of state government spending taking place in water related projects where a lot of DI pipes are getting used. So I think the capacity utilization levels are up, the price realizations are good, they are earning reasonably good margins. So I think in future, if at all, I think the management decides any sort of corporate action of a merger between Electro Steel Casting, which is also into the DI pipes, along with Srikalahasti Pipes, I think that would be fantastic synergy. But I think that is something like a wishful thinking right now. But standalone basis, Srikalahasti Pipe can do extremely well. And at least over the next 2 years, wherein we are confident of the government spending being there, I think you should hold on to stocks like Srikalahasti.
All right, that's the view on Srikalahasti. Let's move on now. Anjaney Pachori wants to know about Tata Elxsi with a 6-month view, and he's asking for advice. This particular stock has hit its 52-week high in today's session at 1,198. It's trading a little off that right now. It's still 4.4% higher in trade today. Amar, what's the view here? It's run up quite a bit over the past few months. I think over 20% gain in the year-to-date period itself.
Yeah, I would say that if you look at this stock, technically it's definitely on a very strong wicket, and even from a short-term, medium-term as well as long-term trend that remains positive. But when I'm looking at the charts from a very long-term perspective, it had made a high of 1,201 in March 2016. So effectively what it means is that the stock is going to meet with some resistance around 1,200, 1,220 odd levels, because that would be a level which professional traders would be and investors also would be looking at, because that's a level that the market was not able to breach for almost more than 2 years. So I would say that at these levels I wouldn't recommend buying, because if you look at the stock over the last I would say 3 trading sessions, it's up from almost 1,100 levels to almost 1,200 levels. So clearly reflecting that there has been a sharp rally in the stock. So any cooling in the stock towards, or a correction in prices towards 1140, 1150, that can be a buying level for the stock. Otherwise, one should wait till the time 1,200 to 1,220 is not taken out on the upside.
Be a little too hot to touch right now.
Well, but the Tata Group companies have been in focus today after TCS, and Tata Elxsi not doing too bad actually. It's trading with gains of nearly 0.5%, and ID stocks have been the flavor of the day. Not actually only today, they've been moving up since TCS came out with its numbers. So the next query is also from the same pack. On Facebook, Shivu SB says he's holding 500 shares of KPIT Tech, a counter which has hit its fresh lifetime highs today. He bought the shares at 230 with a 6-month view, and the current price is somewhere about 250 rupees. Amar, I'm going to come back to you. It's trading, he's making almost 20 rupees on this investment of his. He's got 6-month horizon. Do you think he should hold on? Can he expect higher levels, more than 250, which is quoting right now, or he should book profits?
No, I would suggest that he should definitely hold on to his position, because technically looking at the charts, the long-term charts as well as the short-term charts, they clearly reflect that the trend is very strong. So ideally he should hold on to his position with a stop loss at 217, because that's a very crucial support level. So he should hold on to his position, and only if the stock is unable to trade above 260, 65 levels, then he can look at booking 50% profits, and the balance he can we can trail with a stop loss of 217.
All right, that's the view on KPIT Tech. It's buzzing in trade today as well, 2.5% higher, and it's gained significantly over the past well, 3 months, 6 months and 12 months. Let's move on to the next question. Amol Sabkal writes in on YouTube and wants to know about some good stocks in the consumption and infrastructure themes. Now, we've spoken a lot about consumption going into the elections next year. There have been a lot said about the FMCG companies. Right. Also, the Met Department projection of a normal monsoon is said to add tailwinds to these companies. Parthiv, what's the view here? Consumption, any one of the top FMCG companies with a rural focus? And also on the infrastructure space, what do you have a view on?
Yes, absolutely. I think consumption is a fantastic thing to own. And we are bullish on companies like Marico. I think a very clean management. Yes, they had some trouble in terms of the import duties on some of the oil grades going up. But I think they have fantastic brand power. They can increase the pricing. And again, I think the volume growth that we are expecting to come out of the company is going to be very strong. Plus, they are believing right now in the product diversification strategy. They're launching a lot of new products. So I think we are quite upbeat on the prospects of Marico going ahead. So this is one stock in the FMCG space, which is also catering to the rural market that we are bullish on. Talking about the infra theme, I think lots of plays. I think one can even think of playing infra theme focused in the rural markets via some NBFC plays. Names like L&T Finance Holding, who have been lending to the tractor players, the two-wheeler players in the rural markets. So I think that's a strong way to play the rural theme. And also I feel that a stock, especially related to the infra sector, catering more to the rural and urban. I think a name like PSP Projects, I think they have been doing a fantastic work in terms of getting good order book. They scaled up their operations, they got good contracts. So I think in infra, I believe that a name like PSP Projects can deliver very good returns to shareholders in the next 2 to 3 years.
Parthiv, just curious to know, since you mentioned Marico from the consumption pack, Kaya is the other one of the same group, which the stock's been moving higher since last week. Any view there?
Navneet, the problem with Kaya has been, I think, it was a fancy stock wherein I think the challenge was to scale up the business. And they also have presence in Middle East. And I think despite all the positives in terms of the demographics of our country, where a player like Kaya could have really scaled up, we've seen them really struggle in terms of making a good business model out of their business, wherein I think they can generate very good margins, cash flows, which has not happened. So we're not extremely upbeat. It's a very difficult business to scale up to in terms of the number of clinics they can expand. And we are seeing many hospitals having in-house clinics for a lot of derma related work. So that's the reason we are not extremely upbeat on Kaya, and I think I would avoid this count at current chart.
But the stock in the last 7 days has gone up over 20%, so watch out for this one as well. Moving on to our next query for the day on YouTube, Nandakishore Dawale writes to us. He's bought 160 shares of Bharat Financial at 1,119 rupees, and he's got a view of one today. So it's basically a trade here which he's playing. He wants to know what to do. Amar, I'm going to come to you. 1150, 30 rupees or 31 rupees higher than Nandakishore's buy price. Should he be booking profits? It's a trade of 1 to 2 sessions.
Yeah, I would say that, yeah, definitely he should look at booking profits, because the long-term and the medium-term trend definitely remains positive, but the short-term trend, we've seen the stock consolidate. And also the stock is likely to meet with resistance somewhere in the region of 1155, 1160. So ideally, he should look at booking profits at the current levels.
All right, that's a clear call, Nandakishore. You got to book profits at this stage. Let's move on now. Saurav Kumar writes in on Facebook. He wants to know about DHFL with a 5-year view. He's asking for advice. Another NBFC in the housing finance space there. Parthiv, you've already spoken about the buoyancy of that market, or the expected buoyancy of that market, and essentially the play in real estate. Would you essentially talk about a fresh investment making sense in DHFL?
I would prefer Indiabulls Housing Finance versus a DHFL. If I were to look at the strategy of Indiabulls Housing Finance, where even at the current days, they've been growing at a fantastic rate. Yes, one might argue that the spreads they reported this quarter was slightly less than the previous guidance, but I think the way they are compensating in terms of the advances growth, in terms of how well they're maintaining their NPA levels, the slippages levels, I think is really creditable. Plus, I think think a very smart investment that they've done in the UK market, buying a stake in the bank, that is also scaling up extremely well and creating a lot of value for the shareholders. So overall, I feel that they've decided to give a very good dividend payout ratio. They even declared a ₹10 interim dividend, and I think it's a very juicy yield that it's still coming with in terms of the current levels. So I feel that over the next 3 to 5 years, we are buoyant on the housing market, and the housing finance companies like India's Housing Finance can really scale up from here. They have good capital adequacy as well, and they're going to raise some funds. And in the past, we've seen historically they deployed the funds extremely well. So I think I would prefer India's Housing Finance vis-a-vis DHF.
Okay, so Parthiv likes Indiabulls Housing Finance compared to Dewan Housing. Let's move on to our next query on YouTube. Vinay Karthik writes to us, he's bought 1,000 shares of Jain Irrigation at a price of 124. He does have a long-term view of almost 2 years. He wants to know what to do. Parthiv, should this be a hold?
Sorry, which company?
Jain Irrigation.
I think it's been a little frustrating, the journey of Jain Irrigation, despite the fact that knowing that only 35% of our arable land is irrigated and rest is all dependent upon the mercy of good monsoon, so which is 65%, a huge untapped market. And every year in the budget, we hear from the government a lot of spend irrigation space, especially the micro irrigation space. But I think that does not really move a big needle for a company like Jain Irrigation, which was working on to in terms of improving its balance sheet. So I think in this space, we are more upbeat on the Mahindra Group company, which is APC Industries. They definitely started with the business of MIS, but I think now we are looking that they are continuously expanding the solutions that they're offering in the agricultural space. No doubt the Mahindra Group is a very rural-centric group, and they can really create a lot of synergies with this particular company which they had acquired stake into. And they're definitely launching new products. So I believe it will take some time, 3 years short, but I think this can be a better wealth creator as compared to Jain Irrigation.
All right, let's move on to the next query. This one on a lemon tree. I had actually seen it, but I can't remember who had asked the question. I remember the question though. Lemon tree, the investor is asking for a view on the current price and whether or not it makes sense to invest in that counter. Amar, it's moved up significantly since it was listed just a short while back. If I remember correctly, it was listed around the mid-50 level. It's currently trading at an all-time high, or close to an all-time high, close to the 90 level. Is this the right level to get into the stock?
I would say the stock has, as you rightly said, from almost 60 levels, it's up by 50%. Over the last 10 odd trading sessions. So I would say that one should, and there's not too much of data also for technical charting. So I would suggest that since the rally has been too sharp and almost 50% rally, so I would suggest that any pullback only should be used as a buying opportunity. Yes, overall, if you look at the hotel industry, we've seen a lot of action in other hotel stocks as well. So that clearly reflects that this stock is also likely to head higher. But ideally, the level one should look at buying is around 70 to 75. That would be more of it. Otherwise, it will be more of chasing the stock, which is not a good idea.
I found the name of the investor, Ashwin Mehta. Thanks so much for writing it.
Okay, that's the view coming in on Lemon Tree. Let's move on and take some more queries. Rajesh Goda on Facebook writes to us. He wants to invest in Canfin Homes with a long-term view. He's asking whether he should go ahead with it or not. Parthiv, since we've already taken your view in Dewan Housing, you said you like Indiabulls Housing to Dewan. What's the view in Canfin Homes?
In Canfin Homes, yes, I think this stock was abuzz because of the stake sale and the talks of big players like HDFC, RBL banks, all in the foray. But then somehow that's not really materialized, and after we saw some correction in the stock. Again, a well-run HFC. The company has done extremely well for itself, and yet I think despite all the noises around, I think it has a strategy to grow. But again, as I mentioned, the rationale for Indiabulls Housing Finance at the current levels, valuations, and in terms of the scale that it has obtained, I think I would still have my bias more towards for a pure HFC play. I would still believe Indiabulls Housing Finance is, I think, one of the better names around, and I would focus on that one.
All right, Rajesh, that's the view. Indiabulls Housing Finance is still the stock to pick in that particular space. But let's move on to the next question. This one from Kiran Kumar. Kiran Kumar is asking about another recent listing Bandhan Bank. He's bought 50 shares, but he bought it recently, I would think. He's bought it at 505 and he's asking if he should hold or sell. But this stock is, in its short history done significantly well from the issue price at least. Anybody who subscribed to the IPO would already have made a killing. But the investor has just about entered the stock from what I can tell, 505. Is the long-term story still something that he should hold on to?
See, I do feel that for a long-term view also, he should hold on to. The reason being that, no doubt they've scaled themselves extremely well, especially if I were to talk about the deposit base. I think the way they are growing, that is happening at a fantastic pace and a lot of trouble post GST and demonetization for a lender like Bandhan Bank. I think even in those times, they have been extremely resilient. So now we feel even more confident of them scaling up their business, and especially with the branch expansion that they've done besides the eastern market. I think they can really scale up their business model extremely well. And the best part is that almost 98% of the lending that they do is already in the priority sector lending, and they are earning reasonably good net interest margins of 9.5–10%. So which is quite enviable in this business. And we've seen the businesses which have very good NPA and balance sheet quality and who tend to earn NPS of as high as 9–10%. They always end up getting price to book multiples of upwards of 4.5. And if I were to look at Bandhan Bank, even at current price, it's quoting at price to book multiple of around 3.8 times FY19. So I believe that it's not prohibitively expensive to enter Bandhan Bank here. But yeah, if one is buying Bandhan Bank stock out here at these levels, one will have to give it at least 3 years to get some reasonable returns.
It's around that price where he bought. It's just about 503.
Yeah. Okay, that's the view on Bandhan Bank. Parthiv is of the view, if you're buying at current levels, you should have a time horizon of almost 3 years. Well, we are running out of time. On that note, we would like to thank both our guests. Thank you very much, Amar and Parthiv, for joining us today and helping our viewers with your queries. Well, that's all that we have on this edition of Ask PQ.
But do remember, we're just a tweet, post or call away, so keep your queries coming and we promise to address as many of them as possible on our shows. You can also log on to the website bloombergquint.com and search for the hashtag AskPQ and get answers to all the queries that were discussed on this show. Up next is Power Lunch, so do keep watching. This is Bloomberg Quint.